Hey, what's up, everybody? Welcome to Mortgages Today for Thursday, June 29th, 2023. And oh, what a day it was. Woke up to a bloodbath on the bond market. MBS were down 67 basis points really early. 10-year was up 14 basis points. Stocks were only up 7. Geez, if the bond market's going to get crushed that bad, at least we should get some money back in our 401k or something. Bonds were already weaker in the overnight session after steady selling in Asia and choppy sideways trading in Europe. Now the U.S. economic data is doubling down on those losses. We got jobless claims that came in at 239,000 on a 265,000 forecast. It was 264,000 previously. We also got first quarter GDP, which came in at 2 on a 1.4 forecast. GDP final sales came in at 4.2 on a 3.5 forecast. It was only 1.1 previously. Everybody keeps spending that money. First quarter GDP was revised upward from 3.1 to 2 in the final revision. The increase in real GDP in the first quarter reflects increases in consumer spending, exports, state and local government spending, federal government spending, and non-residential fixed investment that is partly offset by decreases in private inventory investment and residential fixed investment. The PCE price index was revised downward slightly from 4.2 to 4.1. The core rate, which excludes food and energy, was revised downward from 5 to 4.9. The heads of the Federal Reserve, the European Central Bank, the Bank of England, and Bank of Japan all participated in a panel on monetary policy yesterday, and Jerome Powell stressed that rates are still going up and will be at these levels for some time. He sees another couple of 25 basis point hikes this week. Finally, Jerome Powell said that he didn't envision the Fed returning to the 2% inflation target until 2025. So unless there is an economic shock coming, don't look for any rate cuts anytime soon. The hope for the people in the mortgage space is that MBS spreads begin to narrow and the volatility subsides in the market. The Fed futures is showing markets are now pricing in a second Fed hike, finally, that traders have been refusing to acknowledge and will take place by the end of this year. Why have the markets finally come around? In the third and final estimate of the GDP, economic growth was actually 2%, up from previous estimate of 1.3. Consumer confidence increased. Housing is strong. Labor market remained solid. Jobless claims last week fell by the most since October of 2021. So tell me again about how we're going into a recession. Where are you seeing that? At many points in the past week, we've lamented the narrow, boring nature of the prevailing trading range. The thesis has been constant. It will take data to prompt more meaningful move in the market. Trades on technicals in the meantime. Today's data did its best to prompt a meaningful move, with GDP revised up 0.6% and jobless claims falling. Bonds reacted with the largest sell-off in several weeks. Ironically, because the starting point was the bottom of the range, the sell-off was able to get yields up to the ceiling of the range because it's a new range. MBS closed down a little over a half point. Stocks were up 20 points at 99.41. That puts us right in the middle of this very wide range, which is bordered by that Fibonacci hinge point, which had been a kind of hinge point for a month and a half now. And then a new floor at 99.125. So we'll have to see if this is the range that the market wants to see. That Fibonacci range is supported by the 25-day moving average as well. So we'll have to see tomorrow if this is where bond traders really feel like the range is going to be going forward. But in things you can control, your mind, your way of doing things. So check out our sponsor at wellthatmakesense.com. So this is from Alex Hormozy, which is power follows the blame finger. You give power to wherever you point blame to. There is always someone who has had it worse and still did it better. So no matter what, if you say that I am not doing great because of this reason, you're giving up your personal power to that reason being in charge of your life. So you got to really decide if it's the bond market, if it's the housing market, if it's whatever it is the reason for you not succeeding. You're giving your power to that, because there are people out there that have a harder hill to climb than you and did it better. So just do what they did. Easier said than done, but it is possible.